given that, Representative Waters, and in bold so she can see question here, even if she's skimming. Will you ask Jamie Dimon to explain why JP Morgan downgraded the silver sector on February 2nd before the market opened, while the silver trust that they are required to actually add or subtract the silver to was simultaneously setting an all-time record for the largest amount of silver added to the SLV trust in the history of planet Earth? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight, it's going to be like the 60 minutes of the silver market, except without the government propaganda, and certainly with so many exciting things happening in the world right now. Let us dig in, because I know I've been getting the messages about the meeting on May 26th, where the banking chiefs, including the ones for Goldman Sachs and JP Morgan, that routinely rig and violate all of the silver market laws. I think they've covered the full gamut at this point. We're going to be appearing in front of the Senate. Although it turns out in my research, I found that the U.S. House Committee on Financial Services is having their own party on the 27th, which is amazing, because now we have two institutions that have managed to ignore silver manipulation, despite the Bart Chilton interview, and truckloads of evidence highlighting all of the things that have happened. But I decided to contact the U.S. House Committee on Financial Services rather than the Senate. I just felt like I connect with Maxine Waters a little more than some of those senators. You know, they're a little uppity with their like, oh, we're the senator better than the House. Or actually, I wouldn't really know. That's not my area of expertise there. But this one sounds exciting. Holding megabanks accountable. An update on banking practices, programs, and policies, which certainly, if there's ever been a great time for a meeting like that, perhaps we could discuss the MRAC policy that Goldman Sachs and JP Morgan voted on, actually after JP Morgan settled that $920 million fine to the regulatory agency that ignored all the evidence during their first investigation by Gary Gensler, who's now the chief of the SEC. But why get sidetracked on minor details? I know there's family time. You've heard Silverboy go on about his flying saucers and their silver consumption plenty of times before. So let us get right to the breaking news. Read this baby, wrap it up. Everyone can go watch football, as true Americans do, I hear. So here is a letter I figured I would send to Representative Waters in advance of the committee meeting, because since Jamie Dimon and the guy that does Goldman Sachs are both going to be there, this way she'll be armed with the evidence. Now, for folks watching at home, if you're wondering if it's possible that you could get a copy of this letter and email with instructions on how to do all that, and say, hey, as a constituent, you'd like answers too, that will be provided at the end. Or if you just can't wait, in the description field below, you can find all of that on the glorious link, just waiting for you to click on it and then say, wow, that file's written up for me. And even the exact email address to contact for the U.S. House Committee on Financial Services, as well as Maxine Waters' personal website and the contact information made available there. I was able to get that rounded up and write the letter in time for 60 minutes, the true version, on Sunday night. So let us dig in here. I'm just so excited. Dear Representative Waters, I'm writing in regards to the U.S. House Committee on Financial Services upcoming Holding Megabanks Accountable hearing, which actually sounds really exciting. And I did mean that. I mean, that might sound funny, although I'm actually excited about it. I'm a weirdo. I'm a little nerd. This upcoming May 27th, where the CEOs of Wall Street's largest and most prestigious banks are scheduled to testify. Normally, you'd have to pay for a financial consultation like that, and like on YouTube for free now. Legendary, but let's stay focused. As a constituent with the option to vote, I would like to kindly request that you ask the chief executives of JP Morgan Chase and Goldman Sachs about the events that took place in the silver market on February 2nd, 2021. day when the silver price fell 10% in the face of what these own banks' data showed to be the single greatest day of silver demand in the history of Wall Street. And I might add, by quite a wide margin. As you can see on this beautiful chart, courtesy of Nick Laird's Gold Charts Are Us, transparent silver holdings. That's the combination of all of the silver trusts. And you can see those inflows on Silver Squeeze weekend that Jeff Curry of Goldman Sachs famously referred to as insignificant actually turned out to be record setting, but we will get back to that. To aid in your understanding of this critical issue, I refer you to this appendix of evidence that lays out clear repeated violations of U.S. and CFTC commodity law in the silver market by JP Morgan Chase and Goldman Sachs. Some of you whippersnappers watching on are like, well, maybe they haven't seen the Bart Chilton interview where he confirmed all of that from the regulatory perspective, but Silver Chris re-raises by putting the link in there in anticipating. Anyway, please note that these files have already been submitted through the CFTC's whistleblower TPS report facility on February 12th, April 6th, and May 21st. So that's way if Maxine Waters or anyone in the House committee needs assistance, they can go to the CFTC, who's been sitting on the evidence since these dates. And again, you know, it's one thing to just make jokes about corrupt regulators, but, and I love Dr. Paul, the great Dr. Paul, the one true honorable congressman that I've heard of. But if I could have done anything differently, rather than, I think what he said to Bernanke was funny, the 5-minute speech, but I would have just asked a question. I know some people don't think this is possible, but I would have stopped there and just waited for an answer. Maybe we would have sat in silence for 4 minutes and 40 seconds. But anyway, to rectify that, not rectify, I mean, Dr. Paul did his part. And but at least in terms of my own quest for knowledge here, as the student of markets and history that I am, there are some specific questions, well, is one of them in here, to ask Jamie Dimon's JP Morgan Chase about silver manipulation, although if the court will allow me a little leeway to set this one up, I think it's eloquently phrased. The documents referenced above include evidence of fraudulent behavior by Mr. Dimon's JP Morgan Chase, of course, with citations and links to confirm any of this message, which just this past September was required to pay a $920.2 million fine to settle charges by the CFTC and Department of Justice for manipulating the price of gold and silver on hundreds of thousands of occasions. Now, I can understand you might think I'm exaggerating there, but that's actually a direct quote from the CFTC's press release. Yeah. JP Morgan Chase also entered into a deferred prosecution agreement, which the lawyers apparently call a DPA, pretty slick, regarding criminal prosecution charges of wire fraud, while the Securities and Exchange Commission filed and settled charges imposing both disgorgement and a civil monetary penalty. And the Department of Justice described JP Morgan Chase's precious metals desk as a criminal enterprise. Given that, Representative Waters, and in bold so she can see question here, even if she's skimming, will you ask Jamie Dimon to explain why JP Morgan downgraded the silver sector on February 2nd before the market opened, while the silver trust that they are required to actually add or subtract the silver to was simultaneously setting an all-time record for the largest amount of silver added to the SLV trust in the history of planet Earth. Editor's note at the end there. JP Morgan is the custodian of the SLV trust, which means they're the ones actually required to add or subtract the metal, which also means that of any financial entity on the planet that was in position to know what was going on, it was, of course, JP Morgan Chase. Yet, if you're thinking coincidentally, this is quite similar to how JP Morgan Chase was the only bank to service Bernie Madoff's Ponzi scheme, which they pulled their own money out of right before the scheme collapsed, continuing on that incredible market timing. But at least this demonstrates a pattern of behavior. So, of course, now this is all in addition to the hundreds of thousands of the time thing we just talked about, where they got caught manipulating silver, despite how no investor that I or any other silver analyst that I'm aware of, nobody that I've ever heard of has actually received any restitution. I did call the Department of Justice, and it was limited to a specific type of COMEX futures contract that I didn't have, maybe only JP Morgan or Comex or SLV authorized participants can trade, not for the little guy, shall we say. But meanwhile, the bank pays fines to the regulatory agency who missed the entire crime during their first 5-year investigation, while that former CFTC chairman, Gary Gensler, is now running the SEC, amazingly enough. Yet that same CFTC did help create a market structure, which was actually voted on by JP Morgan Chase representatives, amazingly enough. That's right. When Ross Benham was talking about a market structure that tamped down the price, I know you're thinking I'm making this up. Like, even this would be too wild, but I even put the timestamp. So if you click right there, in fact, this is so special. I think we need to do it right now for the video, because the market structure.
Marnie Rosenberg, JP Morgan. Aye.
Aye!
Marnie Rosenberg votes aye. Jim
So
Shanahan,
we officially
Cobank.
have the foxes eating the chickens and hens for dinner, as Marnie Rosenberg of JP Morgan votes aye. So yes, anyway, as we were back down into our letter. So you can actually see that for yourself. I didn't make that up. And that was the policy that helped to tamp down the silver price during the greatest buying spree in history, so that JP Morgan Chase can commit the same exact crime on a fresh round of new victims. When you call the trust investor relations, none of them can answer these questions. When I called SLV iShares trust sponsor Blackrock on multiple occasions and asked them if they thought it was a conflict of interest, that an amount of silver that no analyst I know of believes is possible was allegedly deposited in the trust by repeat criminal offender JP Morgan, yet no one has provided any independent verification of that in over a year, including since JP Morgan got caught really rigging the silver markets. When I asked if that was a conflict of interest, they said they couldn't comment. Now, I also asked BlackRock's customer representatives on multiple occasions if they could explain how the price of silver fell 10% while their own JP Morgan and Goldman Sachs sponsored trust was setting historic silver demand records on multiple occasions. They said they couldn't comment. I did in one call leave my phone number, and I have not heard back yet. And I see that typo. I'll correct it. But the iShares SLV reps were also unable to produce an audit of the trust, even after 3 phone calls lasting over a combined 90 minutes. So Representative Waters, hopefully you will have better luck getting an answer to these reasonable questions at the hearing than I or the other silver investors these banks target have been able to. Because these are government licensed and sponsored financial institutions that accepted an historic amount of money into their silver trust over that 3-day period. And apparently I'm the only one who's asked to see the audit, because they still can't find it even now. And the first time I asked was on February 5th. Also, in case you were not already aware, not only is there no oversight of JP Morgan Chase's custodianship, the metal in SLV, which, to be clear, is the world's largest silver trust, but JP Morgan Chase is actually the custodian of most of the other silver trusts as well. And of course, there appears to be no oversight of that either, which, especially given the RICO charges outstanding against several of the bank's executives and traders, sure seems like a conflict of interest that is worthy of further examination. So that could just be me. Especially considering the bank's deferred prosecution agreement, though, which I understand that means that essentially they're still on probation. So one last note on JP Morgan. It would be wise to listen carefully when JP Morgan answers, because they have lied to regulators before. Representative Waters, beware that this is a bank that has not only been caught manipulating the silver market on over hundreds of thousands of occasions, but that has also been caught lying, trying to cover it up, which includes going as far as to lie to a federal regulatory agency, again, in the words of the CFTC. The order also finds that JP Morgan failed to identify, investigate, and stop the misconduct. The order states that despite numerous red flags, including internal surveillance alerts, inquiries from the CME and the CFTC, as well as internal allegations of misconduct from one of their own traders, the JP Morgan executives, including Jamie Dimon, who will be sitting right in front of you in just a couple of days, failed to provide supervision to their employees sufficient to enable JP Morgan to identify, adequately investigate, and put a stop to the shenanigans. Now here's it. The notes ordered, the order notes that during the early stages of the Division of Enforcement's investigation, JP Morgan responded to certain information requests in a manner that resulted in the division being misled. So they misled the investigation. They got caught and they lied about it. They've continued to lie about it and they are still lying about it. Also, I might add, it's not like they turned themselves in. They got caught lying to the U.S. regulators who are supposed to police the market. That's the only reason they told the truth even then, because they got caught covering it up. That's why they told the truth. They're part of the truth, maybe, because they got caught covering it up. They still haven't apologized. Jamie Dimon hasn't commented on it publicly. It's still ongoing. And of course, they haven't done anything to actually make right to millions of people they've cheated, of which probably if you're watching this, you're one of them. Instead, they just left in true manly fashion. They just left a couple of the junior guys out to roast while the executives have allowed the exact same thing to happen again on an even grander level this time. Of course, each trader confessed that he learned a deceptive trading strategy from more senior traders at the bank, and he personally deployed this strategy hundreds of times with the knowledge and consent of his immediate supervisors. Now the man who runs this organization that treats the government and regulatory fines as a tax or a cost of doing business be in front of you on May 27th. Now for Goldman Sachs' involvement in rigging the silver market, because when it's time for Goldman's Mr. Solomon to speak, Representative Waters, will you kindly ask him to explain the rather bizarre and seemingly illegal comments his commodity chief, Jeff Curry, a Goldman partner since 2008, made when he said on CNBC on February 4th of this year that the shorts are the ETFs, referring to the silver shorts. Click right there for that. The ETFs buy the physical and they turn around and sell on the COMEX. However, aside from there being no economic justification for the authorized participant of a silver trust to hedge metal that it doesn't own, the fund's own prospectus goes as far as to explicitly prohibit exactly what Curry is confessing to on CNBC. Picture that right there. Or you can just go look at their prospectus or see if they can find it themselves, send you a copy. Representative Waters, Mr. Curry went on Bloomberg TV on February 2nd and CNBC on February 4th. The man used Goldman Sachs brand to make either incorrect or downright deceitful statements that materially impacted the silver price. Additionally, this part's amazing, the CFTC's own data shows that Goldman Sachs was perfectly positioned to profit from it, as at least the exchange report shows that they delivered 2,900 contracts, which is right below the exchange limit of 3,000 in March. So depending on when they initiated that position, that shows that they would have profited from the drop in price. But Representative Waters, of course, I would be remiss if I did not also alert you to what Mr. Curry did not mention in either of his fantastic TV appearances, which I think in and of themselves would be sufficient evidence of fraud and market manipulation. But what he didn't mention was, despite claiming it was impossible for a short squeeze to occur in the silver market, even in the face of record-setting demand that he either incorrectly or intentionally claimed was insignificant because of position limits that his own bank routinely violates. What he didn't mention was how on February 3rd, his day off in between appearances, his bank, Goldman Sachs, actually signed off on changes to the SLV prospectus that were specifically designed to legally protect Goldman Sachs against a short squeeze in the silver market. Yet Curry literally went on TV both the day before and the day after and said the exact opposite. Of course, only 2 months after that, the London Bullion Market Association, of which both Goldman Sachs and JP Morgan Chase are members, put out a report that went as far as to state that fears emerged as to whether there was enough silver should demand continue at this pace. It doesn't sound good. But in fact, there was so much fear and panic during those few days in early February that even the CFTC's acting commissioner, Rostin Benham, admitted that the resiliency and the market structure of the futures market was able to tamp down what could have been a much worse situation in the silver market. Now, again, that's a market structure that gets voted on by repeat criminal offenders, JP Morgan Chase and Goldman Sachs, and that has no legitimate government oversight. So Representative Waters, excuse me, how can you finally end here's how you can finally end this, the manipulation of this silver price that has left the nation's currency at great risk. So to recap, the banks were short silver. People bought silver because they realized the price has been suppressed because the banks have been shorting silver. And once the banks got caught with their hand in the cookie jar, they've been lying about it ever since. Yes, I did feel proud of myself for writing hand in the cookie jar in a letter to Maxine Waters. I'm going to put that on my resume. And I'm done with my moment now. Thank you. Representative Waters, as a former equity options market maker and specialist on both the American and New York stock exchanges with an MBA from Wharton, who then voluntarily walked away from all that nonsense in 2012 without another source of income. I was actually scared to my boots to warn the public about these issues simply because I felt it was just the right thing to do. That's what pledge allegiance to the flag, government officials, Congress, president. It's what everyone my own parents trained me to do the right thing. Now, and I believe I have the credentials to say that what happened on February 2nd in the silver market is what in the industry is known as a pump and dump, which is basically what these banks that Maxine Waters once famously referred to as gangsters have been doing throughout the history of Wall Street. In fact, that's basically the only thing they know how to do, and they do it in just about every single market at this point. And if you do hit the subscribe button and the notification bell, I explain that on a daily basis, sometimes twice a day and more than once on Sunday if you catch me on the right week. Because once you spot the footprints, it's actually easy to see how same thing they were doing 100 years ago. And since I know that you once mentioned, Representative Waters, that you wanted to rein in the chronic law breaking by the biggest banks, I've enclosed on a silver platter the evidence submissions, as well as the multiple citation links throughout this letter that will provide you with a more clear and simply worded evidence, with more clear and simply worded evidence than you or the government's army of lawyers would ever need to take appropriate action to stop this habitual pattern of crime. Of course, this is in addition to the suggested questions for each bank previously mentioned that give you something specific to sink your teeth into for each of those executives to answer on the record. So if they do lie yet again, then we can add perjury onto the charges that I will already be doing my best to bring in any capacity. Despite both JP Morgan Chase and Goldman Sachs putting their name on the SLV trust, I've not been able to get anyone from either firm, and I've called multiple times, but I can't get any of these guys to even venture a guess as to how they explain the supply and demand anomaly that occurred on February 2nd when the silver price fell 10% as their own silver ETF blew away any other demand inflow data point in the known history of the silver market. And I might add, I could get a couple bullion dealers to go on the record too, saying that was the most silver they ever sold as well. Lastly, given how the US dollar, the world's reserve currency, was once backed by gold, at least until the collapse of a similar scheme known as the London Gold Pool, forced Presidents Nixon and LBJ legend Johnson to remove the gold and silver backing from our nation's monetary system, this issue has now actually become a national security risk too. A risk that not only affects every single American, put on my politician voice to finish this baby out, but actually, we won't go full like Jesse Jackson. I'll back that up a little bit. But actually, anyone around the globe who interacts with the United States financial Wall Street and Federal Reserve System in any capacity, the bastions of economic stability that have at least led me to plan to leave the country. So in closing, I do sincerely thank you for your time and consideration, and trust you will find this matter to be in the direct interest of not only your constituents, but a lot of other frustrated voters who I know, because I hear from them all the time. I'm up answering their emails late at night. And I know they would eagerly support whoever finally puts a stop to this. So there's a little bait, sincerely on the behalf of Chris Marcus, which is me, founder and creator of Arcadia Economics. Got a little typo there, but I'll clean that up. I also created the Silver Industry Integrity Committee because really, from my background on a trading floor, I just look for truth to interact with that as simply as possible. and I support truth in free markets. By the way, if you hit that subscribe button and the notification bell, then you can be notified, because I did make a bold claim last week where I said I was going to give away a 100-ounce silver bar to someone who demonstrated the principles of truth and freedom. And I found the winner. I could be bluffing, but hit the subscription button, hit the notification bell, get ready for the House Financial Services Committee, because it's coming your way this week.